Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast for the week ending on June 30th. My name is Ian Saunders, and I am joining as well this week David Clark. David, it's good to see you back here virtually. We were together here for a little bit in person throughout the past week, but it's good to be back on here with the podcast with you.
Yeah, we've been together a few times over the past month. You and I have in person quite a few times, not necessarily on the podcast though. So we're making our rounds back to this one to show our glowing faces on this podcast again. I know people are excited for that.
Yeah, hopefully it'll be good here. I'm sure it will be. And it is also going to be the last podcast here for the month of June and the last podcast for the first half of the year. It's hard to believe that we are already halfway through 2023. I mean, it feels like we were just gearing up with things we were looking to do in 2023 and kind of market updates at the beginning of the year. Now all of a sudden we're halfway through. Definitely hard to believe, and probably hard to believe a lot of the market movement too. I mean, we're seeing massive outperformance from many of the domestic equity areas, many of those laggard areas throughout the first half of the year, which we've hit on a lot in the research. We're coming in here with market movement for the last week of the year, and the S&P over the past week or the last week of the first half of the year, S&P over a trailing 7 days is about flat. So we're kind of coming in as a kind of petering off here for the last week, at least at the time of this recording on Thursday. S&P is ticking up a little bit. Russell 2000's ticking up a little bit more. But we've seen some other areas of the market, David, that did not show as much strength earlier in the year. That really, in some spaces, picked up the pace a lot recently, and that's been the transportation space. I mean, you mentioned that you and I have been with each other a little bit more. We certainly try to take advantage of some of the transportation, especially here recently. But there's been some interesting updates to that kind of more Dow Theory transports perspective, right?
There has. So, I mean, sort of the first jump off point is the fact that on that asset class group scores page, we've seen that transportation group increase above the score of 4 really for the first time in roughly about 2 years, if I'm recalling correctly. So, pretty significant to see it move above that score of 4. And historically, whenever transportations is above that score of 4, like many things, has a tendency to show some potential for performance or positive performance. Now, it's pretty the history only goes back to 2011, so worth bearing in mind there whenever we look at that performance. But nonetheless, it doesn't take away from the fact that when we look at that sort of Dow transportation average, which on our platform is the symbol DTX, it is rallied very significantly here recently. Actually moved back to a buy signal, has rallied well up into that mid 1500s level on its default chart, even further when we look elsewhere in it. It continues to be one of the more improved areas. Now, looking at the sort of Dow theory concept there, for those not familiar with it, it's basically looking at the DTX, that Dow Transportation Index, as well as the Dow Jones Industrial Average, which is .DJIA on our platform. It looks for them to break out above prior resistance levels, either one right after the other or simultaneously, sort of in tandem. And the additional piece of that is it looks out for that breakout, but also looks for an increase in volume within the Dow as well. So we've now seen, looking at those charts for DTX as well as looking at the chart of the Dow recently rallied up to a prior level of resistance, is now reversed back, looking for it to rally above that level of resistance, breaking out there in the case of looking at just on the closing prices. And that's one key piece to mention here, is that the Dow theory is concerned with closing prices. So really what price we're looking at for the closing price perspective, we're looking to move above that 34,400 level on a close in order to break out above that resistance as well. Whenever we see a move above the 15,070 or 1570 mark for DTX on the close, would also break above that also. So looking for those potential breakouts. And when we look at the volume here recently from the Dow, we've actually seen that month over month it's increased 13%. So very kind of trying to summarize all of that in a very short amount of time. We're setting up well to see the potential for breakouts, and we've also seen the potential for and that increase in volume month over month from May to June. So really setting up for those who are followers of Dow theory. And if it's able to break out, it would give a nice additional kind of piece for upward confirmation that we might have some more potential for upside out of US equity equities right now,
Yeah.
which would be a positive sign because we've been looking for additional participation from many areas for some months now.
Yeah, absolutely. I think that volume point, David, that you mentioned too. I mean, that's something when you think Dow theory, I mean, obviously you think of transports rising and then followed by the Dow rising, right? But that volume, that aspect of it, I think is pretty important too. And when you mentioned largest current increase since September, right? It's also the
Hmm.
first time we've gotten an increase in back-to-back months, right? So we got an increase in May,
Hmm.
7%, and then an increase this month at 12, 13%, at least at the time of this recording, in volume on a month-over-month basis. Haven't gotten that in the past year. So we're
Well,
seeing this kind of consistency from a volume perspective on back-to-back increases,
mhm.
which I mean just adds to the kind of positive confirmation that you could potentially see if we do get that return to the upside there for the Dow.
Well, and furthering your point, when looking back at the last time we've seen a notable increase in that type of volume, and we noted back to September of 2022, folks remember the market was moving notably lower in September 22. So the fact that we're seeing that increase in volume along with an actual increase in sort of absolute price, if you will, a little bit different story now than what we saw back in sort of the latter part of 2022 when we saw some of these breakouts with the two indices not quite happening in tandem, but also not seeing the increase. It's sort of eh, it's weird to call it a perfect storm, but almost in a way, you're getting all these pieces falling in place. So
Yeah.
definitely gives you some bodes well for a high level of positive evidence. So
Yeah.
adds to it.
And you mentioned, I mean, a positive or looking at a perfect storm. I think a lot of the stuff that we would talk about then transports space, right? I mean, you think in the general looking at what planes, trains, and automobiles is the
Hmm.
what you alluded to earlier. I think that kind of classic movie. The perfect storm hopefully is not something that you see. We hope looking for not that many storms when you're thinking about planes, right? We've seen a lot of storms here recently that have unfortunately caused a lot of flight delays. But you're seeing that kind of perfect storm playing out pretty well for the broader airline space. I mean, just looking at that U.S. Global Jets ETF as one of those broader representatives, as a near perfect 5.93 fund score, shown pretty sharp improvement, especially over the past month.
Yeah, and at this point, rallying up to match that prior resistance level that it saw in February at this, and much of that is on the backs of two that have taken most of the headlines here recently, two primary airlines that have taken those headlines, Delta and American being the two, DAL, AAL. Will just this week have gone from being low attribute 2 for 5ers to high attribute 4 for 5ers with pretty significant rallies. And looking at that chart of Delta, we actually saw it give a market RS buy signal following Tuesday's action, also reverse back into a column of X's on its pure RS chart following Tuesday's action, giving it those two additional attributes, but has been on a buy signal since earlier this month. And with today's action, actually rallies up to 47 on its chart for a 2-year high on the stock. So have seen many of these rally pretty significantly, and especially Delta and American along with Jets. You're looking at pretty overbought pictures right now within some of those stocks.
Yeah, I mean that's Delta's what almost its intraday level is 173% overbought. I mean, you saw that strong that break back through to a positive trend. It's breaking out to a 2-year high with movement up to 47 a day, but 170% overbought is
That's
certainly the highest
Bitcoin
we've seen.
readings.
Right, right. Certainly the highest we've seen in several years. I mean, initial support on that chart is not coming in until around the 33 level, which is kind of down just below the midpoint on its trading band. I know as we alluded to, we've done a fair amount of kind of traveling over the past few weeks, and I've certainly had a few issues with Delta with some cancellations here. So hopefully that'll translate into a little bit of a pullback from a price perspective into a little bit more actionable trading range, because this would not be a stock that be looking to jump into given just the massive stem that you see it on here right now.
Well, and that'll be a common theme that you see with a lot of charts, especially within the tech space and even within the airline space now. Cruise lines could also possibly be thrown in there as they've seen pretty strong rallies. And now, really, you're just looking for chart normalization. You're looking for normalization at current price levels, really building nice levels of support and allowing you to potentially exit and then possibly have another exit if you need, or entry and then exit for the position that's a little closer to current levels. But planes aren't the only thing that we've seen improve here recently. We've seen some improvement out of that automobile space. Tesla's obviously garnered a lot of the attention in terms, but one that's sort of quietly, if you will, almost shown some decent improvement here recently has been Ford. It's technically a two for fiver right now, but ultimately has returned back to a buy signal and has rallied up to resistance or above resistance there at 1450, currently sitting at $15 with today's action, highest level we've seen since August of last year for the stock. And some of that I know is attached with what's gone on in Ford and Tesla's relationship, but it's worth noting that you're seeing improvement out of elsewhere in the auto space, just outside of Tesla, if you will.
Yeah, absolutely. I mean, Ford's still a 2 for 5 attribute name. So, I mean, it ticked up earlier this month from a 1 for 5 or to a 2 for 5, or kind of at it going back to a column of X's on its market RS chart. But you're seeing today's move, as you mentioned, going up to 15. It does move it into overbought territory. Again, a consistent theme, like you said, with a lot of these transport names, but breaking a spread triple top there after it's back in a positive trend. We're not seeing today's move is going to be enough to even add an X on its market rail strength chart, but it doesn't have a ton to go before it gets back to a buy signal on that chart. You're looking at about another 10% outperformance relative to the market, 10 to 15% there, in order for it to move back to a buy signal. So not out of the realm of possibility, certainly, for a stock that's up 27% year to date, another 10% when you're looking at some names like Tesla that are up over 100% year to date.
Right.
Another 10% doesn't seem that too extreme to see there happen for Ford. So that's definitely an area that we're monitoring there. You got initial support coming in at 1150, which is also about where that bearish resistance or negative trend line is going to be located. But when you're thinking about Tesla, you're thinking about Ford. You got to think about companies that are going to be taking up a lot of these cars, or at least a lot of cars you see out on the street, right? That's Uber, right? I mean, it's
Mm-hmm.
talking about travel. If people are hopping in planes to go places, then they gotta find some way to get to their location once they get there.
We've
And I know
probably taken more Ubers in the past 2 weeks than planes, and true.
that's true. I mean, the first thing I always do when I'm plane lands at the airport is look to see how far away the Uber is to pick
Mm-hmm.
me up, right? And so you've seen that kind of reflected in the Uber share prices as well. I mean, you're looking at Uber, unlike Ford, very strong technical attribute name, 5 for 5 from a technical attribute perspective. It ticked up from a 3 for 5 to a 5 for 5 back in May. So it's been a consistently strong name for about 6 weeks at this point, right? And we saw that share price rally up, begin to rally in May, breaking it, going back to a buy signal at 34, and then just go straight higher in a column of X's up to the current chart level at 45. Seen a little bit of a pullback from an extended positioning there, but we're also seeing that kind of notable resistance point coming into play for January. David, that's going to be a pretty interesting point to monitor. Again, overbought, pulled back a little bit, maybe like to see it pull back a little bit more before considering it an actionable area, but pretty strong looking technical picture there for Uber.
It is, and really, it's interesting that we're kind of having a conversation just within autos. The fact that Ford, Uber, and then really another place to me that you could toss in that sort of autos conversation within this sort of broader transport is truly the trucking transport companies. And I want to give at least one of these a shout out just because it's a chart to me that we're talking about a lot of extended positions, and yes, it's extended, but not quite as overbought as many of the things that we're looking at right now, and that is SIA Incorporated. It's SAIA. It's a non-transports, or it's a transports not air company. Sits in that top quintile of that sector matrix. Has given 4 consecutive buy signals this month, rallying up to a new all-time high. Again, a little bit extended, but not quite as overbought as a lot of the positions we've been talking about within the transport space. So, did want to at least kind of give it a shout out along with Uber as maybe being an opportunity within sort of that autos area that you could see some opportunity within. And I think that's in a lot of ways what we're trying to convey here is, yeah, we're talking about transports, but that doesn't just mean one, broadly where you could
Right.
look for opportunity.
Right, absolutely. And I think another kind of trucking area that comes to mind is Old Dominion Freight, right?
Mm-hmm.
ODFL. I mean, you're thinking about, yes, moving people are traveling again. They got to go into Ubers, they got to take planes somewhere. But we're also seeing that kind of trucking perspective that stuff has to go places as well. People start buying things and it has to move around the country too. And ODFL is another good kind of example of that with freight movement. 2 consecutive buys, been back to a positive trend again, a little bit overbought, but like you said, there are certainly other areas that are more overbought. So strong 5 for 5 from an attribute perspective. When you're thinking about freight movement too, a lot of the aspect that we've seen historically when we've thought about that though has been the final of your planes, trains, and automobiles, and that's trains, right? And we saved the worst for last this time, thinking about 2 areas that have shown a lot of improvement. Trains have not kept up with the broader pace of improvement from the transports space, have they?
No, not at all, really. I mean, even looking at one of the more popular names, or what had been one of the sort of stronger names within the space, Union Pacific. I mean, it's down to a 2 for 5. Or granted, moved back to a buy signal here recently and flipped that trend back to positive, but that's only after it's fallen down, along with the broader market in March, and really ultimately its fall started well back in the latter part of 2022. So, no, not seeing quite the same level of participation from some of those railway names. And really, what's interesting about talking about railways and even going back to Dow theory is originally when Charles Dow developed the theory, it was focusing on railroads, and the transportation index has very much become not railroads. So
Right, right.
it is kind of interesting, sort of the piece over time that you've seen this improvement out of transports, and sort of what may be someone's initial thought when they think of transports might not always be necessarily the case. And
Yeah.
especially if you're looking for opportunity, if you're thinking of transports and you automatically go to railroads, then you're not really seeing much in many ways.
Yeah, I mean, you look at something like Canadian Pacific Railway, ticker CP, right? I mean, it is a 3 for 5 from an attribute perspective, and it is in a negative trend. But you look at this chart on a point and figure chart. I mean, it's been in a wide but definable trading range between $65 and $84 since really the beginning of 2021. I mean, it's just moved sideways, essentially kind of up and down through there. I mean, that is a wide range, but hasn't really been able to move kind of one way or another out of that. It gets to the top and then turns around and goes back down and gets back up. It's now a kind of moving up toward the north end of that. So we see that chart at the current chart level at $80 at least. It's pulled back a little bit from that from an actual price perspective, around $78 at the time of this recording. If it can get back to 81, that'll move it back to a positive trend, tick it up back to a 4 for 5. And then you're looking at that kind of 83 to 84 overhead resistance to see if it can get back out of that trading range. It's been in for over 2 years at this point, 2.5 years. So we'll see if if some of these train stocks can follow some of the other transportation areas that have just shown such sharp improvement recently. See if those areas can kind of pull some of these trains back onto the tracks, if you will.
That was a way to end it there.
There you go. And yeah, on that note, I mean, I think David, that probably wraps up most of the areas that we were looking to cover here. Just a quick housekeeping note: we're not going to be having a podcast next week, given the holiday week, but we'll be back strong in for the week of July, starting July 10th at least, so ending to July 14th with that next podcast. It's going to be coming out, and we'll be talking to you there about what movement we see going on in the second half of the year. So, David, good to be back here talking with you.
Pleasure as always.
And everyone, thanks for tuning in this week for the last podcast of the first half, and we look forward to talking to you in July.